All right, Friday, February 6th, 2026. Here we are. I'm filming this in the last hour of the market, but the market today is ripping after being down and being pressured and in the red. It is absolutely so strong today and so green, and we are going to close uh, up significantly for the day, and which is absolutely the theme we've been talking about, the volatility, about how the last few days can just be like this and then this dramatic bounce. And so volatility for January. I'm still playing the volatility thesis for the year, and today is certainly no exception. So let's start off with last night. Amazon announced earnings. Going into earnings yesterday, the stock sold off about 4.5%. So investor confidence, they were taking profits ahead of the earnings. So they weren't, they had some doubts about it. And then after hours, well, let's talk about the numbers. I'll tell you about the after hours in just 1 second, because the numbers for Amazon were amazing. They killed it on revenue. Their earnings were down just a little bit, about 1%, but there was a special charge off on that. They What the market didn't like was, again, like we've seen before with the Meta sell-off, with the Microsoft sell-off, was they're raising their outlook for capital expenditure for the year to $200 billion. So significant raise on what they're going to spend, mostly on AI infrastructure, but also on their low Earth orbit satellites. LEO is the name of that project. And they also announced a partnership with AT&T. They're going to have each other's back. One is fiber, the other is satellite, and they're going to provide redundancy for each other. So there was a new partnership there. And as you know, or as you know from before, that I'm an investor, long-term investor in AT&T. That's a hold for me. I don't trade that. So I like that news. But back to Amazon and their numbers. It was after they announced that CapEx, the capital expenditure, 200 billion possible this year, the market sold off, the stock sold off another 11%. So for the day, last night, it was down almost 15%. And yes, I stepped in and I bought some, but I'm going to cover that in just a second. Let's talk about the numbers. You guys, the revenue for the first time was over $200 billion for the quarter. That was up 14% year over year. For sales of that size, 200 billion in 3 months, to be up 14% year over year is mind blowing. There was a special shout out by Andy Jassy, the CEO, for their everyday essentials and same day delivery. So people who are ordering everyday essentials and want it now, there is a huge jump in that. And you know that I like Amazon's moat to competition with their delivery network. Walmart is the only competitor, and they are a country mile behind them. And so incredible. That was advertising. Advertising was up 22%. You know, Rufus, the little AI chatbot that comes on when you're on the Amazon app, uh, the conversion for Rufus was amazing, and the advertising was up to 22%. But Amazon Web Services, and this is where I see that CapEx, most of it going toward, was up 24%, which is, I can't believe a company this size has those growth metrics. 24%. And Andy Jassy is like, you guys, we have so much more demand for compute on AWS, on the web services. We have to invest, but we have immediate return on investment waiting for us. And so this is not some theoretical build out. This is absolutely the money is there, the money is waiting, and like we've talked about this week, the last few episodes, return on investment. It's just waiting at the door. The customers are lined up, and I like that. So when I saw the drop in 15%, I stepped in and I bought some Amazon under 200 and at 199. And I actually leveraged in a little bit lower than that too on a second tranche. So um, I want to talk about that versus the trades we've talked about earlier this week. You know, I've been in and out of ServiceNow and Salesforce twice, two round trips. I bought and sold, then I bought and sold as they were coming down, protecting my downside as always. That's number one. Before we make money, we protect from losing money. But I want to cover those in just a second. So AWS, 24% growth. They also announced that they have just passed 1 million robots in their fulfillment centers. And so that is an incredible metric and cost savings. And I know that technology and artificial intelligence is going to lead to job displacement 100%, but history has proven again and again that with every revolution, every advancement in technology and industry, that people are retrained and they learn new jobs. And so I am not, desensitized to that whatsoever. I've been out there in the workforce plenty too. But anyhow, this is I have complete confidence in that. We can do a whole other show on that because there's so much to it. But 1 million robots, pretty incredible. So the theme of the week, and like I said, previous show, January, very volatile, and volatility is my theme going into this year. For a trader, that can mean opportunity. It means double safety. Like I say, you wear your belts and your suspenders, but there's also great opportunity in it as well. And for example, today, the fear factor, the VIX, after spiking above 20 yesterday, and being up, over the last week so sharply. It dropped 17% today, 17% just today in the fear factor, and that's a huge move. Bitcoin was on a big downward slide, and I'm not saying that this is, on its way back up by any means, but today alone, it's back up over 10% just today. And the so we see really dramatic moves going on, lots of volatility. The staples like Procter and Gamble, that Johnson and Johnson, things that we buy every day, toothpaste and yada yada. That sector for the last month has been the hottest sector, and in the last month it's up 13.5%. All I'm going to say on that is that is very overbought for that sector historically, because that's where you go for safety. You don't go there for growth, and you go there for a nice steady earner during tough times, things that people need and can't do without. Plus they offer, a decent dividend as well. So it's a place to hide out in tough times. Over the last month, that's had just in relation to its historic self, an incredible run. So I'm really cautious on the staple sector. On the other side, software over the last 3 months as a sector, the IGV, which is again another ETF. By the way, the XLP, when I say that for staples, that's an ETF that you can look up that ticker. And the IGV is a software ETF, down 30% in 3 months. That is an historic drop in that amount of time. And as you know, that's what we've been talking about with ServiceNow and Salesforce. But I was in and out testing those, and they showed poor price action. So what I did instead was I made the safer trade. I bought Microsoft, okay? Microsoft has been getting beaten down like no one's business, but this is an earner. This is absolutely, do I think that AI is going to displace Microsoft and their operating system and everything that goes along? No, I really don't. Is it oversold? Yes, I think it is. So I made an entry point. As we talked about, I'm not buying all at once by any means, but I really felt that it dropped when it dropped below 400, that into the low 390s, that was a nice entry point. So I'll keep you, abreast of what's going on there. So I bought some Microsoft, I bought some Amazon. I've already sort of covered the Amazon sell-off, which, again, dropped below $200. And those two companies, here's the thing about that. We know they have the proven track record, they have the proven management of the company. Obviously, huge moats, barriers to entry and moats to competition. And those companies are, in my mind, yes, the software sector is getting hit. Yes, it is a risk to step in here. So what I'm going to do, I'm going to take the least risky of that software sector that I think has the most promise going forward, and that's Microsoft. And I thought about it because I talked about that. I talked about holding the bag, being left holding the bag, that at the end of any, you know, trade, or, if all goes wrong and you're left holding that bag, what is the company that you own and what is their track record? Okay. Investing in something that does not have profit and is speculative and has maybe a technology that is yet to be proven, that's precarious. But to me, holding the bag with Amazon and Microsoft, I'm sorry, time is on their side and history has proven themselves. So, in a nutshell, I just came up with a thought. Rather than holding the bag, I thought about pointing a gun at your foot. Okay. Would you rather have a bullet in that gun, or would you rather have it be a water pistol? Because that high speculative, yes, you could possibly earn more money in something that company I talked about that is not yet proven and all of that. But to me, that's like playing, Russian roulette with one bullet in the chamber. You pull the trigger and something might not happen. That's fine. But the downside is if you hit that bullet, you got a hole in your foot, versus if you take a chance on dipping your toe into, buying a little bit of Microsoft in this case, you're playing with a water pistol, and you might squirt yourself, with that water, but it will dry over time. My confidence that that company will continue to perform as it has in the past, with that size of an installed customer base, that water will dry and that stock will recover. And so I don't know, maybe that's a thought for you that works, maybe it isn't, but I thought about the difference between playing with bullets and playing with a water pistol. So there you go, guys. Look, like I've talked about before, it's all about volatility for me right now. Stay nimble, but stay safe. Always think about the downside first. Things are moving quickly and there's opportunity, and it's so easy to chase and reach for something when it's going nuts. Like today, this market, I know there are people they're out there doing it, but you have to be safe first. And so that's it. I hope that helps for today. I hope you had a great week, and this leaves us with a nice green tape going into the weekend. I always like a green tape going into 2 days off. I think it gives the market something to really marinate on, ruminate on, and I like that. I like that a lot. So anyhow, there you go. Hope everything is well, and I hope you have a great weekend. And I will, I'm sure, talk to you on Monday. Thanks so much. I appreciate you as always. Bye bye.